Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.8%. There on the S&P Nasdaq 0.89%. Semiconductor, grain, Dow, Russell 2000, transport, banks, energy, biotech, healthcare, home builders, utility, retail, emerging market, every single sectors are seemingly red today. Bitcoin down quite heavily. Gold, silver, miners are down. Dollar down. Oil down. Treasury bond down. VIX popped about 5%. There, let's stick with the S&P 500 ETF. Spider! 65-minute chart here. So this is what we closed yesterday. And looks like we actually saw decent sized gap up here this morning. However, the down gap that was open yesterday, I talked about this on the last night's analysis, that this going to cause the buyers some difficulties going forward when that gap wasn't fully filled here. So as you can see, when we did get up and with the gap up, bulls should have filled this gap completely when that gap was not even touched. We just got there, we won't even feel any of it, and you can see how quickly bears brought it down, right? Boss bears are not making this easy here, right? From this level, when bulls got up to that level, quickly shot down. So boss bears are really aggressive here, making sure that bulls do not enter any of this vicinity. Now that this down gap is getting stronger, right, along with the falling resistance right there, right? With that, the low gap was quickly filled, didn't even act as support. We blew right through that. We blew through the micro-term moving average and the short-term moving average and the 400 support. We have retested for the first time in a while here. So as you can see, last time we touched the mid-term moving average. This was back in January 25th here, as you can see. And this level did act as support. We did see that move for several weeks, and so it's been about a week or two since we came down to retest that midterm moving average. So it'll be interesting how this market plays out. Some of the levels, obviously bulls will need to reclaim the short term and the micro term and 407 to at least try to get up and retest that resistance here, falling resistance right here. And bears, if we lose that midterm, we got 404 and 400, and that's kind of the long-term moving average. It's been a while since we see that long-term moving average got retested. So I think this level here, this is current support level 407, 406. Let's check out that oscillator. So the oscillator is the oscillator coming down right now, as you can see right here. So that's definitely, that's what the oscillator is representing and favoring the sellers going into tomorrow. This is, so what the buyers need to do, if there is any sort of a very surprise counterattack tomorrow and market tends to rally back up, let's say if this, makes a up move, this is a level where, that bullish divergence is a possibility. Perfect. Just because you can see we're in that higher low zone while this oscillator is seemingly making that lower low there. However, bears don't want to deal with any of that. So then you do need to, if you're a seller here, you do need to continue to bring that price down so that the oscillator will come back down and mop the floor. And that will be the best case scenario for the bears. So objective is very clear here. Bears want to continue to push it down, utilize some of those, short-term moving average and micro-term moving averages as a new resistance. Buyers obviously got to reclaim the micro-term and short-term and try to cross that, oscillator back up and that forming that bullish divergence. And we'll come back for you. We'll reassess the situation. Injury evening goes trading tomorrow.
Are not safe. Not even close. In fact, you are pegged. More pegged if you don't do what I want. And what I want is half your shit.